Welcome to the Crypto and Blockchain Talk.
Hello.
Hey.
Guten Tag.
Aloha.
Hola. Shalom.
Hello.
Namaste.
Ni hao.
Privet.
Hello.
Salut. Yassas.
Salve.
Ciao.
Bonjour. Our podcast talks about the latest trends in the worlds of cryptocurrencies and the blockchain.
Hello, everyone, and welcome to this week's edition of Crypto and Blockchain Talk. And today with me, I have none other than the most magnanimous Ben Jessel. He is, of course, a Forbes.com writer and just an overall excellent person. Ben, welcome to Crypto and Blockchain Talk.
Hey, Aviva, thanks for having me on.
I'm so excited. There is so much crap going on in the crypto world that I don't even know where we're going to start. Well, actually, I do. We're going to start with the fact that India is expecting to pass a bill which will criminalize cryptocurrencies. And not only are they going to make it illegal to trade and mine crypto, but it's also going to be prohibited to actually possess any of them. And there's even talk, from what I understand, that there will be harsh penalties if they find that you're holding cryptocurrency. Now, according to another article I read, this may not be a permanent situation, but it is still going to be the situation. And this is a massive country. This country has, I don't know, Ben, I think I got to look it up. Do you know how many people live in India?
It's something like a quarter of the world's population or something like that, right? Is it like a couple of billion?
Yeah, the population of India is 1.366 billion people in 2019. So let's just round. 1.4 billion people live in India. So that's 1.4 billion people out of the total world population who are being told that you will end up with a smack on the bottom if you are caught with crypto in any way, shape, or form. That's just incredible.
And it's not a nice type of smack on the bottom either, from what I can tell.
No. Yes, I guess.
Maybe I should clarify that.
Please don't. Well, the funny thing is that China's ban was interesting in itself. So I was there in China when the ban took hold in 2017. But, in China, the crypto ban only covers ICOs and crypto trading. Users are definitely allowed to own Bitcoin and other crypto, and it's even classified as private property in China. Now, there is a rumor that China does plan to shut down all of their crypto mining, which will be a problem because something like 70% of crypto mining, or Bitcoin mining, I should say, happens in China. And just recently in Mongolia, when it was ruled as illegal to mine crypto anymore, a lot of those Mongolian companies moved to China. So it's going to be an interesting journey for those people in particular, because they're nomadic people anyway for the most part, but boy, now their mining machines are going the same way. I mean, they're going from country to country to find a home. What do you think this looks like when you have now two populations of people where one, obviously, it's completely illegal, and the other one can still own cryptocurrencies, but the crypto trading is a no-go, which is quite hard then to engage really fully in the whole crypto sphere and really become part of that whole community. So I think if you add up those two populations, that's a pretty big dent in what I would say would be adoption of the mainstream cryptos, especially also because, as you know, China has their own CBDC, which is a central bank digital currency, which of course is centralized like any central bank digital currency would be. But what do you think this is going to end up doing, if anything at all, to the price of crypto in the long run?
Yeah, it's interesting, isn't it? This idea of banning a decentralized currency that in itself is uncensorable. It's a little bit like putting the fingers into the breaking dike, you know? I mean, how are you going to actually stop this from happening practically? I mean, all these wallets, you can have non-custodial wallets, which is pseudonymous. You could just generate two numbers, and those two numbers don't live anywhere. It all lives on the internet, you know, as far as we're all concerned. And so it'd be very interesting to see how you actually indeed prosecute someone for owning Bitcoin. Would they actually have to raid your house and find a private key? Or would they have to see that you have an account with an Indian registered custodian, which in which case they wouldn't be registered? To a certain point, you can stop institutions operating in the country that are headquartered in India. And that's how a lot of the mainstream will access this. But if we look at the case with BitMEX, BitMEX got sued because people were accessing from IP addresses that are outside the US. Apparently, they didn't do a good enough job in identifying that and stopping that. But if you look at a lot of these exchanges, a lot of them are located in more crypto-friendly countries. So they can be accessed, whether it's through Tor, whether that's through VPNs and the such. Or, in other cases, you could just have a friend or a family member in a different country and they can give you your private key. So I think that it has some practicality issues associated with this. Now, I guess, India is a very large country. It is predominantly a rural country that does not have good access to infrastructure. Such as the internet. So, as to what penetration there is in India at the moment, I would say is fairly low. But, the potential is to have, 1 billion or so of that population being able to grasp that. I guess the other challenge is that if India is even 20% successful, then that could set a template for other countries who are looking to crack it down as well. It certainly is a concern, I think, for Bitcoin and other cryptocurrencies in general. Now, even India itself has been they've given a little bit mixed messages about this. You have heard, this report from Reuters. Another English language newspaper in India has actually cited the Minister of Finance and Corporate Affairs as stating the government is not planning to completely bar cryptocurrency use. But it appears to be a little bit unclear as to what it means by that. It says that it'll allow certain windows for people to do experiments on the blockchain, bitcoins, or cryptocurrency. That does seem a little, so you'd like to experiment on this. But what does an experiment look like? Is an experiment holding, $50,000 of Bitcoin? So clearly, I think there's probably some differences of opinions even within the organization or within the country itself, the ruling party itself. There was also, I believe, a Supreme Court Act which overturned the India's Reserve Bank, which was a decision to ban financial institutions from providing services to cryptocurrency companies. So even if it does go through Parliament, you've still got the Supreme Court who could overturn it as well. So, I think certainly warning shots have been fired. It's not clear how they would implement it or whether it would survive the other broader pieces of the legislature. But I think we should be worried about this.
Just when I think I should be worried about news like that when I read it, I then look at other news and see things like in Miami, they are looking to fully embrace Bitcoin. The city has actually supported efforts to hold Bitcoin in the treasury and even allow tax payments in Bitcoin. Matter of fact, they've even gone as far as to ask for payments for salaries in Bitcoin for government staff in Miami, for all the employees of Miami. They're looking for them to also be paid in Bitcoin if they so choose. This is a massive city in the United States. This is Miami. And the fact that they're saying that they really want crypto, they want Bitcoin to really take a hold and be part of the overall economy, which of course, if you're going to pay people in Bitcoin, you're going to want people to spend their payments, to spend their salaries. So that means that it's going to lead to further adoption, because obviously when stores find out that employees of the city are being paid in Bitcoin, they're going to take Bitcoin. Of course they are. I mean, I would. Every day there's announcements. New hotels taking Bitcoin, new airlines taking Bitcoin, everyone in the tourism and travel sector, which of course is fully supported by the city of Miami. So I can actually see if they did something like this in Miami, it leading to a very, very concrete adoption, a groundswell, which would make sense, and it would maybe be the start of something that would overtake the rest of Florida and, dare I say, the rest of the U.S. Then, of course, France. A French lawmaker has signed a petition to allow the central bank to buy and hold Bitcoin. He feels it's going to put them in a stronger position. And he doesn't want them to be left behind because guess what he's doing? He has actually said that he's been watching how companies such as the MicroStrategies and Teslas of this world are going forward and acquiring large sums of Bitcoin. He feels that the country themselves should be doing the same with their central bank. And his idea is, hey, listen, these multi-billion-dollar companies are doing this. We shouldn't be foolish. We should be looking at these people who have multi-billion-dollar companies and following in their footsteps. So do you think that's a good strategy for a country to have, follow in the steps of MicroStrategy and Tesla?
It is interesting in terms of these companies are clearly at the start of this adoption curve. And everyone looks crazy at the start of an adoption curve, you know? It's everyone else joins in the party that something then becomes mainstream, and then people then go, well, how could we have ever done without it? So the question is, do they look like the crazy people because they're just early adopters, or do they look like crazy people because they are actually the crazy people? And all of this was ultimately unjustified. And I don't think we'll know for some time. I mean, I think what's interesting now is it's getting to the point where it's becoming a little bit of a self-fulfilled prophecy, you know? MicroStrategy buys Bitcoin, announces it buys Bitcoin, price goes up, MicroStrategy, makes money on the deal. MicroStrategy then goes out, takes the money, and then buys Bitcoin, price goes up again, and then more people want it, et cetera, et cetera. So, I mean, they've done well on that front. I think what was interesting is if you look at Grayscale Trust. Grayscale Trust is the way that corporates get an allocation to Bitcoin. It's kind of the vehicle that tends to get used by corporates because it's easy to deal with and worrying about your private keys and all that kind of stuff. Now, these corporates have been really buying into Grayscale Trust into such a point that it actually commands a premium. So if you look at the price of Bitcoin versus the price of Bitcoin and Grayscale Trust, the premium has fluctuated from anything from 0 to 200%. In some cases, people are paying double the value of Bitcoin just to get exposure in this vehicle. So that to me has always been a very interesting way of determining if organizations were truly adopting it. And the funny thing is that recently the premium has actually been negative. In the last kind of jump down that we had of price, the Grayscale Trust shot down in terms of the premium. To such a point, the backer of Grayscale Trust actually went in and bought up some of its own stock in the Grayscale Trust, which in its turn stabilized Bitcoin, then Bitcoin went back up. So what I wonder now is if there is now sufficient large vested interests now in Bitcoin that they can, I wouldn't say manipulate, because I think that's the wrong word there, because that suggests malfeasance. Mm-hmm. But there is certainly this kind of net, safety net that's been created now. We've got all these big players who are able to support and smooth out some of these drops by saying, well, look at these big institutions behind who are kind of backing it. I do wonder. It is interesting to see these big companies turning themselves into basically, investment houses. Is what kind of MicroStrategy has really done, is they've turned themselves into a fund. There are very few problems that can't be solved with growth, right? Everyone's happy, the rising tide floats all the ships. Where you do get into trouble is when everything starts going down, and bondholders start getting grumpy because they're losing money, or leverage trade starts to go wrong, et cetera, et cetera. And I think that's what this needs to weather is we're in a bull market right now. All this stuff is happening in a bull market. We need to see what happens in a bear market. Will this be sufficiently protected in that bear market? And if so, then that's great. We kind of know what the floor looks like. We know that these large companies that have come in and made these large investments have effectively protected the market to a certain extent. But I think it's too early to tell right now.
You really can go from article to article, and it just really makes you try to create this puzzle and see if you can make sense out of everything. But, and then you go to Harry Dent. So Harry Dent is a very famous American financial writer. And he actually wrote a book in 2009 called The Great Depression Ahead. So we already knew this wasn't going to be happy reading. But an article came out where Harry Dent said about the stock market, it's the riskiest market since 1929. And he feels the U.S. economy is about to bottom out. And according to him, and this is a direct quote, a huge collapse is coming. And by the way, this is in bold and underlined. A huge collapse is coming. This thing will be hell. This is what he says. And this guy, by the way, also went to Harvard. Okay. Now, I'm not saying that if you go to Harvard, it automatically means that you have the crystal ball to the future. I'm not trying to say that at all. What I'm saying is, he wasn't some guy who just rolled out of the back of a truck and decided to give some opinions. He has been in the financial arena for a very long time, and he's been forecasting for also just as long. And one of the things that he covered during this interview was about crypto. And the question was, will cryptocurrency be part of that huge crash? And his answer was, yes, I think Bitcoin is a big thing long term, and that crypto and blockchain is a big trend. It's like the internet of finance, money and assets instead of information. So yes, it's a big deal, but it's in its early stages. And then he goes on to say this. Bitcoin is going to go to 58,000, 60, 80, and then end up back at 3,000 to 4,000 US dollars. I would buy it long term, a couple of years from now, but I wouldn't touch it between now and then. So before I say anything else, it's a bit of a disclaimer, and that's that nothing we're talking about on this podcast will ever resemble giving you financial advice, because we're not giving you financial advice. We're giving you information for you to become educated and make wise decisions. If you do want to make any forays, any movement into the crypto arena, you need to do your own homework, your own due diligence, and I mean a ton of it. And if you're still confused, go and find yourself a registered financial advisor. So, in saying that, there's a website called Long Forecast, Long forecast.com. And if you go onto there, on the right-hand side, you can see it says Bitcoin. So you can click on any of those tabs on the right-hand side, but click on Bitcoin, and you can see the forecast all the way up until 2025. And nowhere here does it even look like 3,000 to 4,000. I don't see 3,000 to 4,000. I see 229,000. I see 201,000, 180,000. I see all kinds of numbers. I do not see anything that resembles that. And there's also another kind of forecasting tool called walletinvestor.com, but I'm going to use Long Forecast for this example. So, Ben, my question to you is, when you're faced with the Harry Dents of this world, and then Bitcoin price prediction tools such as Long Forecast, how do you reconcile this? I mean, somebody in your shoes who's also a veteran writer, somebody who's had a long-standing history in this, how do you look at this stuff? I mean, I know how I do. I want to know how you look at this and reconcile it in your mind.
Yeah, I think the first thing is that not risking more money than you are comfortable losing is the best way to start on all of this, at the very least. I mean, obviously, that's a given. Don't buy Bitcoin on credit card. Don't take out a loan for it. Don't do what some of these other people have been doing, like buying, mortgage your house. I mean, you might as well just put all your money on red in the casino. I guess, it's about taking lots of data points and then coming to a point of view. There's been some interesting discussions on what's called the stock to flow model for Bitcoin, which is kind of almost an attempt to empirically analyze how the price moves based on the amount of supply and things of that kind of nature. That's kind of an interesting model, although it's been fairly widely discredited now. There's also the theory that after a halvening that you can look at patterns that have happened before. So the trouble with patterns is they're always looking in the rear view mirror. This happened last time, so it might happen this next time. Patterns can be both self-fulfilling. People buy because they expect that, because other people are buying into that pattern. And they can actually be real because of underlying mechanics. So that's an interesting data point. I think another interesting data point is that there's a school of thought that suggests that if you look at the way that Bitcoin kind of goes parabolic and then levels off, sometimes for years and then goes parabolic again, like, the year or two we were in the 10,000s. There's an argument to say that Bitcoin, this is a very negative view, is still a Ponzi scheme insofar as that the way that it goes up in value is when you get renewed interest from a new group of fresh meat who are attracted in the space. And then those who made money coming in that last cycle but couldn't cash out because there weren't enough buyers can then palm it off into the next new batch of fresh meat, who are then caught in this perpetual cycle of needing to then wait until the next rise goes up. And each time there has to be a new buzz around this to get people excited, a new group excited to buy back in. So that is a theory, just a theory, as to why we do see some of these shifts. And that kind of really is part of the greater fools theory that, as long as you can find some greater fools that will take this off your hand, then, the price always goes up. So somehow you have to take all of these aspects, the analytical stock to flow model, the patterns, understanding whether patterns are self-fulfilling or are actually real and isolated. You have to take, some of these other theories in terms of maybe it is a Ponzi scheme that's driven from those dynamics, put them all together and come up with a point of view based on that. And that has to be a very personal thing. No one is going to tell you, no one should be telling you what to do on this front. Another interesting approach is the kind of dollar cost averaging approach, where you just have a standing order, a payment which comes out of your account every month for, 1% or, some percentage of your paycheck. And that will buy Bitcoin, whether it's up, whether it's in the middle, whether it's down. And that is, if you look at what Warren Buffett always suggests for investing, he suggests you put your money in a tracker, S&P 500 tracker with, just a regular amount bought every month. Now, Bitcoin is in no way comparable to an index tracker fund, but I think if you take the aspect of it, which is that buying every month, no matter what the price is doing, that is probably a very good piece of advice, because that way you're not being swayed and taken in by, oh, wait a minute, the price has shot up, maybe I should buy in, or the price has gone down, maybe I should get greedy and double down. You don't get sucked into the falling knife trap when you think that because it's gone down you should buy, and you find it falling down even more. And I think that's taken in combination with this idea that you're not going to risk more than you can afford. I think that's probably going to be the most conservative approach to take on it. Does that make sense? I know it's a bit of it depends answer I've given there.
No, it's a beautiful answer. And just to shoot from your comment of never invest more than you can afford to lose, as you know, stimulus checks in the United States, where you live, are going to start going out to households. Apparently 10% of all stimulus checks, or approximately 40 billion US dollars, is going to go towards Bitcoin, apparently. And this would, if this happened, it would push the market cap up by 3%. Now, how do we know this? Because apparently Mizuho Securities surveyed 235 people and a little bit more who are expected to receive these checks. And that's how they got their 10% of the recipients are looking to bet on Bitcoin with their payouts. Now, I think this is quite skewed because I don't know how they did their research, and it doesn't actually say in this article how they did that, because it really depends upon where in the United States they did this and the age and so much more. Yeah. But let's just say that this really was the case. 10% of all stimulus money was, which by the way is given by the U.S. government, in my understanding, so that people pay their rent and eat food. But we won't go there. We're not here to judge. I personally really couldn't give a crap. But the whole point is that would be a really big boost. It would push the market cap to well over the trillion that they're looking for at that rate. That everyone's looking for, because of course the more we get towards that 2 trillion, guess what? The SEC apparently is going to open their arms according to all the theories and say, yeah, finally Bitcoin is right up there with fiat currency, the US dollar, and we could all have ETFs and party on. Apparently, that's that magical 2 trillion I talked about in the last podcast. But anyway, going back to this piece of information where 10% of all of these stimulus checks are going towards Bitcoin, Goldman Sachs said that another chunk will be going into the stock market. So what do you think about these numbers, and do you believe that these numbers are correct?
Oh, I have no idea. I really don't. I mean, it's. I just hope people are investing rather than using it to buy lottery tickets.
Of course, if you're speaking to Michael Burry is an American investor, a hedge fund manager, and he's also a physician. He founded the hedge fund Scion Capital, and he then closed this to focus on his own personal investments. But he's best known for being able to foresee and profit from the subprime mortgage crisis. And what he said mirrors what Harry Dent said. And he described Bitcoin, this is a couple days ago, as a speculative bubble and says a crash is coming. This is the guy, don't forget, who foresaw the subprime mortgage crisis. And what he says is the following. He describes Bitcoin, first of all, as a speculative bubble. And he compared this boom in the cryptosphere to the dot-com and housing bubbles. And he said the following. Bitcoin is a speculative bubble that poses more risk than opportunity, despite most of the proponents being correct in their arguments for why it is relevant at this point in history. And then he went on to say, which goes in line with what we said about due diligence and being educated. He said, if you do not know how much leverage is involved in the run-up, you may not know enough to own it. Which basically goes in line with everything really this podcast stands for. Becoming educated enough to understand what you're investing in so that you don't lose your shirt. Do you think that most people understand what they're investing in the first place? And I'm talking about any investments. And secondly, do you think that if these 10% of stimulus check holders were to invest in Bitcoin, do you think that they understand how much leverage is involved?
I don't think anyone really knows what's going on. I really don't.
You and I both know they don't.
I think kind of what's interesting is if you look at something like BlockFi, for example, which has had a huge run up, it's a crypto lending business, for example. which I think at one point has like $30 billion of crypto assets under management, right? There were some rumors when we had that recent collapse in the Grayscale Trust premium that they may be in trouble because of that. So most people wouldn't even know who BlockFi was. Certainly wouldn't know that they have, what's rumored to be $30 billion under management. That all of that is in this very lucrative business of both crypto lending and also investing in Grayscale, or know anything about the Grayscale premium, yet that organization was rumored to have been on the edge of bankruptcy because of this collapse in premium. How esoteric is that? Yet, if that had indeed failed, then that would have had huge ramifications on the price of Bitcoin. And this kind of information is kind of circling in, little groups across the internet, within our little communities. Very, very hard to really pin down and know what's going on. And that is just a small proportion of what's really going in under the hood. And then you have all of this stuff that's happening in DeFi, where billions and billions of dollars are getting kind of pumped into DeFi and wrapped in various exotic ways to then be pledged and, on these various DeFi exchanges. I think that's the problem. There is now so much systemic risk. It's so hard. A bit like the whole kind of Lehman Brothers. One of the things that's said about Lehman Brothers was that if you actually knew how all of that circular risk went round and round and round, it might have been that Lehman might have even been solvent. But people became too scared to lend to Lehman because they didn't know how much of that risk was actually going around because no one could account for it. Similar kind of thing, right? Because this stuff kind of goes on unchecked, and for a lot of people, they're kind of seeing it as this kind of merry-go-round of money. It means that no one really has the clue about what that systemic risk is in the whole ecosystem. I think that really worries me. There's a lot of these big parties holding a lot of this risk, and then also the long tail. Just a lot of kind of stuff, in DeFi.
DeFi, of course, has had a meteoric rise within its own niche within the whole entire crypto landscape. It's just that and NFTs, of course, so those markets are going to be obviously affected if anything that Burry and Dent have said is going to be correct. I mean, everything's going to take a direct hit. But in terms of these price predictions and what is happening right now, do you think people should be looking at Bitcoin in terms of being a long-term investment? Or do you think that they should be looking at something where they can do a quick in and a quick out?
There's quite a good joke about investing, which is that I've got this investment, but it's a long-term investment. And what that usually means is they bought it for a quick buck and then it hasn't done so well. So they're like, oh, it's a long-term investment. So it makes me laugh slightly when I can hear is it a good long-term investment? I can't tell whether we're at the top or if we're in the foothills. No one knows, not even the smartest people. I think there are just as many smart people on either side who have said, it's going to happen or it's a scam. We just don't know. I mean, again, if you're prepared to not invest more than you can lose, and you can do it incrementally, and you can dollar cost average, then you certainly are hedging your risk better. And I think that's what it's about, is think about the risk and how you can mitigate that risk as much as possible. And those are some of the ways you can do it.
There's of course these crypto stocks where you've got, so like Tesla, Square, Salesforce, even though it's not really heavily invested in crypto, it does make blockchain solutions. So, which of course is the infrastructure behind crypto. So we'll lump it into a crypto stock. It is possible, obviously, to invest in cryptocurrencies like Bitcoin, or God forbid you listen to Elon Musk and you do anything he says, or any famous person and you just jump into it because you're a sheep. Let's just say Doge. Listen, I'm not disparaging Doge, but you should be buying Doge knowing that it's a joke coin. Yeah, I mean, there's a lot of good projects out there. So, of course, it's possible that you can just directly invest in digital currencies, or you can invest in stocks that heavily invest in crypto. So instead of investing in crypto, you could invest in Square or in PayPal, or something like this. Do you think it's a good idea to invest in a company where they're spending a lot of their corporate treasury on cryptocurrency, which if it does tank, then it will obviously impact that company greatly? Or in the case of Tesla, his investment right now of his 1.5 billion has paid off. So what do you think, if people have an option, do you think that this is a good option?
I think what's interesting about Tesla is actually the stock price of Tesla has consistently gone down since he did that purchase. Now, I mean, you could argue that has nothing to do with Bitcoin at all. It's to do with other exogenous factors as well. But, that made me laugh. It's one of those correlation versus causation things. So, I mean, I think there is an argument to say that we are likely to be going into if not higher inflation, then a higher expectations of inflation environment. And that, inflation is, the worst kind of tax, right? It takes money away from people and organizations by making your dollars worth less. There's even a good example to say that, part of this run-up of Bitcoin hasn't been Bitcoin going up. It has been the purchasing power of the dollar going down. I think that view is a little bit extreme. If you look at the run-up of Bitcoin, I think it is vastly outstripped, anything that inflation could do. But be that as it may, there is certainly an argument to say, where are we going to find some kind of yield, or at least some way where we're not going to have our money eroded? Because if we have it in dollars, then it's going to erode. Even if we have it in treasuries, short-dated treasuries, it's kind of going to erode. So I think there is an argument to suggest some kind of allocation. JP Morgan has even suggested, an allocation of Bitcoin, 1% for certainly individuals, high net worth individuals. Potentially there's an argument that corporate treasury could have this. I guess the question is that when you're going to move past the whole, well, wait a minute, is Bitcoin not actually built on anything? Is it just people just saying what it's worth? And you start equating that to other types of borrowing and other types of securities. You do get into this kind of deep philosophical conversation of what is money, what is investment, which is probably a bit of a rabbit hole that's not worth going down. So if you're going to put on one side whether Bitcoin or not is actually built on anything and has any intrinsic value, it does seem to be an asset class that has been appreciating well. It's been beating out other asset classes. It's getting broader base adoption. There are still many yet to come on stream. You are starting to see organizations and individuals starting to get into Bitcoin that previously hadn't been before. Okay, they're all, the more progressive organizations at the moment. We haven't yet seen, the General Electrics of this world, but as you said, Mike, the state of Miami has. So based on that, there is an argument to say that an argument can be made for having some allocation in corporate treasuries. I think it's harder to manage some of the risks, insofar as your private key is compromised, you lose it all. I was about to say it doesn't happen in the same way with treasuries or other kind of funds. But actually, you only have, a certain amount of FDIC insurance, in checking accounts. If you think about what happens in non-corporate treasuries every night, is all of that money in all those treasuries gets repoed on the repo market, where they're like, well, what are we going to do with it in the evening? And they get out a big loan, where they collateralize this and they get a big loan that they can send elsewhere. So every night, trillions of dollars are effectively getting tied up and swapped with other parties. And you're hoping they kind of come back the next morning. And sometimes they don't. So, when you talk about risk, that Bitcoin is risky, sure, but also what's happening overnight while you're asleep. There are big risks happening in terms of a lot of this repo stuff. And ultimately why Bear Stearns and, Lehman failed was because of things like repos. As you can see, all these things are very philosophical, the nature of money and risk. So I think all that considered, I think there's certainly an argument to have some of this in corporate treasuries as a result of that.
Everything that's going on in this whole world space, like I've already alluded to, with everything to do from the Indias of this world to the Miamis, everyone in this world right now is making some kind of stance on digital currency, which of course plays out in different ways. And we're just going to have to watch this space and see what happens with it.
I couldn't have said it better myself.
Thank you so much for coming on and discussing this with me.
Thank you, Aviva. It's been fun as always.
Yeah, it has. And I always learn so much when you come on. It's fabulous. It really is. I just hope that everyone who's been listening also feels the same way, that you've learned something new. I'd like to ask you to invite your friends and family to download this podcast on one of the many podcasting platforms, which is available on the Crypto and Blockchain Talk website. There's a full list including iTunes, Podbean, Stitcher, Spotify, a full list where anyone can find what they're looking for with the podcasting platform of their choice. These podcasts are also broadcast on Crypto 24 Radio, which plays news, music, and these beautiful interviews 24/7 around the world. Not only that, you can talk to us through our social media channels of Twitter, Facebook, and Instagram, but we'd love to hear from you directly. And to do that, you just email us at education@savvydigital.com. That's education@savvy, SAVII digital.com. Again, we love having you as our listener. We know you have a choice of podcasts to listen to, so when you tune into us, it means the world, believe us. So again, thank you for listening. We want you to take care, be safe, and goodbye for now.